Okay, so I'm going to start, David, by asking you a super simple question. What is a bear market?
So that whole 20% down from highs thing is, I guess, what we learn in the school books and stuff. But the way I deem a bear market is a market that is trending lower and has not hit a bottom and doesn't have one in the foreseeable future that you can point to. So I don't really worry about the whole 20%. It's a market that has broken, that is beneath all the major averages, and that continues to downtrend lower. That often is down 20% from highs.
Okay, so we're always talking about sort of the financial impact, but can you talk a little bit about the psychological impact of a bear market? What that's doing to people's minds right now?
Sure. You have the initial, oh my God, it's not easy anymore the way it used to be. And then you have the, okay, it'll get better and hopeful phase. And then you have the, oh, okay, the hope didn't work. I've lost money and this is starting to get painful phase. Then you have the, oh, wow, I need to find a new career phase. And then you start to finally have the panic and distaste and lack of interest. And that's part of the problem. It's a long process that many people don't adjust to or recognize till they're halfway through it, right? And I've certainly been at fault there as well. Thank God, not too much now. But the point is, often you don't even figure out you're in it and that you need to change, whether it's the type of stocks you buy, how you take profits, or more importantly, how you take losses till you're midway through. But it's kind of despondent, depressed. Sometimes you have people that are angry, and of course, there are the happy, aggressive traders that love downside momentum because it's quicker than upside. I mean, things go down much faster than they go up. So you have that range of emotion, but of course, despondent, sadness, just total lack of interest eventually usually takes course.
Okay, so how would you how do you view the temperature out there? Because so the VIX is up about 65% in the last few weeks. All the sentiment indicators are very negative. Are people negative enough?
No, and it's not because I'm that bearish. I have many times in the inner circle said the extremes of 2021 were so extreme, I expect some of the same on the downside. So, what that means to me is I've been around. I'm not 20, and I've seen a lot of extremes on the upside, but nothing akin to SPACs, rocks, JPEGs selling for millions of dollars, or apes, or everyone and their mother filing a deal, or Plug Power hitting 70. Cockamamie companies that have been around for decades and lost money. By the way, I sold a company with my partners to Plug. Like, I'm not making fun of it, but it is what it is. All it's done is lose money for, I don't know, 15, 20 years, and it became one of the hottest stocks. So when silliness happens like that, you imagine the downside, if if the financial picture warrants it, might be as extreme, and that would be indicative with the VIX, or less bear market rallies. What do we had, like 3 bear market rallies of significant moves, right? That thank God we've been a part of usually. Um, it's not that fearful. Everyone's measuring the VIX, and I say, well, okay, whether the VIX is broken or not, a lot of people just say it's broken. I say it's always been broken, but sometimes it works. One of my best trades ever was Timex during COVID, right? So eventually it'll work, but I keep telling people, look for other areas, look for how leaders go down. And Apple's not going down that hard, right? All these solar names were just the hottest stocks in the market, ENPH and First Solar, et cetera. And then you had stocks like Snow come off lows from earnings and go up something like 70, 80%. That's not indicative of everyone being despondent, fear, and anywhere near the way you bottom in a market. And there are going to be a lot of people, I don't want to get too long-winded, that talk about how we've been going down for a year. Yeah, the stocks that have been going down for a year, stocks, most of them should never have been public. Half of them were SPACs. So I don't use that as an excuse. There is not that ever present fear like, how am I going to wake up tomorrow? How much money am I going to lose? I haven't seen that yet. Did I lose you?
Sorry,
Okay.
my mic was off. So let's talk a little bit about the silly stuff.
Mm-hmm.
Like we saw like sort of a boom and bust in everything goofy, which I define as everything from NFTs to Rolex watches, sports cars, electric guitars, trading card games, um, cryptos. Do you think that stuff has more downside to go?
It's almost like irrelevant to me. But yes, usually they trade pennies on the dollar, but it's kind of irrelevant, right? Like, I won't judge where we are in the marketplace by really like how far Bitcoin, let's say, let's use the big kind of face of everything. Does it have to go to 10,000 or 12,000 to create a bottom in overall risk assets? I almost don't care. The point is, they're nothing to focus on. But sure, I don't think the lows are in the art market, in the watch market, in so many, like, I'm into collectibles. I'm like a child. I collect sneakers, art, you name it. Anyway, the point is that market has only barely come off. So yes, the answer is there's absolutely a lot of arenas. I mean, the car market is just beginning to implode. It's going to be, they're going to be upside down Lamborghinis everywhere you look over the next couple of years that you can buy for pennies on the dollar. So the answer, I guess, is yes, there's further to go, but I don't paint them all with the same, paintbrush.
Okay, I'm glad you brought up the cars, because I remember months ago inside Inner Circle, you were talking about the semiconductor industry moving into a state of oversupply. And now we're hearing from JP Morgan, Wall Street banks talking about this sort of supply glut in everything.
Mhm.
Do you think that is priced in yet?
No, it's a process. I learned the business via guys like, if they're old timers on here, like Whittington and some semiconductors or something I followed forever. And it usually takes many months. It's not like a 1 quarter deal. It's often 2, 3 quarters. And the difference this time, right, is the amount of orders, right? The double, triple orders to play catch up to what they thought demand was so intense. The downside here might be a little longer and more severe than we normally see. So these stocks are all going to bottom before the news flow changes, but I don't think they've hit bottom yet, because the amount of ordering and catch up that every major chip company did through 2002 and through 20 and 21, they did a little bit. By the way, that goes for clothing and so many other arenas, but no, they're not at bottom yet, in my opinion.
Okay, so related to the question of sentiment, it feels like a lot of high profile market people are catching a lot of flack lately, like Kathy Wood, who wrote that letter to the Fed and everybody sort of laughed, and
Kathy, not familiar with her.
especially
Who is she?
she she's that
Michael, come
person
on,
that had
ignore
a
me.
pretty unbelievable 2020 was the best year of her life, sadly.
Sorry,
And
go
especially
on. No, I didn't mean to interrupt.
yeah, no, that's fine. And especially Jim Cramer has been catching an awful lot of flack. I mean, you see the inverse ETFs being filed and all of those sorts of things, and it seems like we're in that um, like hero killing mode. Symbolically, obviously.
Right.
Do you think that's fair to them, or do you think that they deserve it?
It's an excellent question. I think when you put yourself out there publicly, it kind of comes with the territory, right? It's like, I hate when you see a movie star complain about not having privacy, but then they make $20 million on their next film. So the direct answer is how they handle it. I think in both instances, it's for the same reason. Neither has humility. In other words, Kramer, everyone that knows me knows I think the guy's beyond bright. But he's also, literally totally off his rocker. And if he was just a little bit more humble and talked about his mistakes and didn't pretend he didn't recommend stock, SPACs when he was talking about guys like John Ledecky with, such laud, or, calling QS the next most important company perhaps in the technology market. If he just came clean regarding how he handled certain things, I don't think this would exist. If Kathy didn't say, we're investing for 5 years, right? That's what she keeps saying. I'm investing for 5 years. She never said, you know what, I probably made a mistake here and maybe was a bit more aggressive. So neither have had any humility, and that's why they're so attackable. So they're it's fair because they're both handling it poorly, if you ask me. I mean, I make mistakes all the time. I'm not important like they are to the rest of the world, but at least come clean. They're like Josh Brown, right? Josh Brown recently made a call. He thought CPI, forget which number it was. He thought we were about to have a rip your face off rally. The guy came clean and said, I was as wrong as wrong. No one thinks about it anymore because he was humble about it. So I think they deserve it because they pretend they don't make mistakes. And God knows they're the king of mistakes in this bear market.
Okay, so all right, so I'm gonna ask you a bit of a personal question to help me. So I think I'm like a lot of people that I felt like a genius in 2020.
Uh-huh.
I felt less smart in 2021, and I feel like a moron now because I can tell you right now, my trading account, there is an awful lot of red.
Yo,
So
Michael,
what
can I ask you a
advice do you have
question?
for me?
Why don't you follow our chat? I'm being serious, right? Yeah, something's not clicking here, but we can talk about that
Yeah,
later. Maybe you should pay attention to the chat more, but continue.
okay, so all right, I feel like I would jinx you if
Oh,
all of
okay.
a sudden
All
I
right.
started like following trades
Okay.
in the chat. I feel like the trading gods. But like what advice do you have for people that went from having it easy
Mm-hmm.
to having it tough now?
Okay, the first thing, 2020 through 21, you may not see again for another decade or two. Literally, at best. I really, believe that. We saw things you're not supposed to see in financial instruments and markets. And I think, I'm not going to play Mr. Macro expert here, but I think we all know that it was the most lethal combination of our actual government and Fed officials just flooding everything with money. So it was easy, and you may not see it, but the quicker you adjust to reality, right, the better it is. And here's the good news. And I keep telling people, if they can make it through this, the new game, which by the way is a little bit more realistic in how markets are and what to expect over the next decade, you're going to have constant 10 and 20% pullbacks in markets. Like that used to happen all the time. So the last few years, we had that one in 2018 and then COVID and the V. The point is, this resembles reality a bit more. So if you can figure out how to include valuation with your charts. There's so many guys who are just think they live and die by the chart, but they don't have knowledge. So I've been telling people about this semiconductor implosion that was going to come eventually for a long time. I didn't have to look at charts to save me a lot of money on the downside. Not perfect. I just made a mistake with AMT, in fact. But the idea is I've made a lot more money in semis and lost because I understood what was coming. So the quicker you educate yourself and adjust, down the road, it's going to be a lot easier. So this is kind of good. 2020 was fake and not real. If you locked in the money, congrats. It's not fake. I don't want to ever pretend that. But the bottom line is that's not indicative of your future in the market. So if you can figure out today, then you can have a real future in the business.
Okay, so like earlier you talked about how like the market would move before the news flow got positive. So are you thinking or doing any long-term buying at all?
Occasionally here and there, but nothing of any real significance because I always say we're ruled by the averages, right? The indices are what guide us overall. So whether I think, I don't know, whether I think Goldman should be bought, regardless I know earnings are coming, or whether I think Nvidia's might be oversold finally, whatever the stock is, if I think the Qs have 20 more points of downside, right, that really relates more to risk assets, or the SPYs coming in another 20 or 30, then if I'm buying long term, it's very slowly and very small till I feel the averages are at least in a reasonable level where I have an edge, and then the stocks can go up. My key to trading, if I'm long, I want a stock to be able to go up without the averages. If I'm short, I want that stock to be able to go down or implode without the averages. That's the whole key to trading for me, is relying as little as possible on the market. Right now, there's very few stocks that can do that till we go lower, in my opinion.
Okay, can you talk about some of the names that you think have a chance of sort of escaping the storm?
Escaping the storm? Yeah, the oil
Or at
stocks.
least,
Beyond that, and some lithium plays and things like that. But beyond that, no. I think every company's at risk, from restaurants to financials to semis to cloud and software names, which are still relative to history very expensive. So just let's just look at the oil names, and whether it's Devon or Halliburton or Oxy, have your choice. The problem is, I'm a big believer that eventually oil follows the rest of the economy. So if we are to go into a recession, I'm not an oil expert. I rely on other people I think that are even better with oil than me. It's not a focus of mine, but I'm a believer that oil too will follow to the downside. So I've missed some upside this year, although thank God Kira, Rick have bought Oxy quite a bit and done well with it. I keep missing it because I keep looking for really more downside follow through. Eventually, I think oil will follow. So I would be looking on any long term plays right now. What do I think has a good 2023, right? That I'm not going to get the bottom on, that maybe I'm within 10%. So here's a name that had a disastrous 2022, that was the first to rally during COVID and one of my largest positions, but then hit every single pothole they possibly could and has been a disaster. That's Amazon. Few companies actually are going to have good comps because they actually didn't have, like, things didn't get bad till the last quarter. Amazon's been bad in closing warehouses and restructuring outside of cloud business and stuff, AWS. It's just been a mess. So I'm actually thinking that's one of the few companies in the big cap realm that I get excited about. So that's one I'll be focused on. Google gets down at 90. It gets too cheap. You can look at it, and contrary to everyone's opinion, I looked at Meta today and I even talked about it. And I also always say I concentrate on bear markets on much larger names because they bounce first. So why make our lives difficult? We could look at Asana and PayPal and S and Team or Twilio, whatever stock you want to look at. I look at the big guys first because they move first. But Amazon would be one of my favorites for 2023.
okay, so I think that's a good segue to talk about earnings season, which is coming soon, and everybody has the fear of this supply glut. We just saw it with Nike with their inventory spiraling out of control. You hear that with Walmart, Target, et cetera, et cetera.
By the way, I adore restoration hardware, but we haven't hit a bottom in the housing market. So that's one over the next few months. I will also buy long term. But these are stocks that really have more downside. Wynn's another name. Continue. My apologies.
Okay. Yeah. So again, with earnings season, everybody is freaking out about a supply glut because we saw the inventories with Nike and Target and Walmart, whoever. Do you think that's priced in?
I think that's going to be solely dependent on the Federal Reserve and the CPI. So if the markets want to go higher, this earnings season has very little to do with the actual print. You're going to see several misses, right? It's going to be the worst earnings season in 4 or 5 years, and many of those stocks will be up the same day. So anyone who's playing for the beat or not beat, like 50% of the companies that miss will actually be up. It may not be worth buying calls because of IB, but the point is, it's going to be much more dependent on if markets are oversold and if people can look forward into 2023 and see some comps that actually get better. So if it's not a disaster, if, example, AMD has gone through this monster slowdown with PCs and such, but the Fed is not out to crush the economy and inflation is actually slowed, and I'm not buying AMD, but it's just an example. There will be people that look out there and say, okay, it's not as cheap as it used to be based on this miss, but I can see an uptick in computer sales, and I see a lot of their growth businesses were not affected. I'm willing to buy it here, and it's built in. You're going to have a lot of that this earnings season. It's not going to be whether they miss or beat. It's going to be, is the Fed closer to the end of this rate hike cycle or not? Does the CPI finally come in light or not? Does the PPI, that's what's going to move these stocks. And then there'll be a few beats, right? Like CrowdStrike can always beat in this environment. Snowflake, there'll be a few of these high profile ones, but they might be too expensive to begin with. But are housing stocks going to beat? Are gaming stocks going to beat? Right? Is like, they're just not going to be a lot of beats.
So do you think the Fed is going to succeed in a soft landing?
No, I mean, I don't think it's remotely possible. I think the extreme was too high. You know, when we talk about things like the car market, there are too many industries like that it's going to be bad. The same way crypto's been bad, the same way NFTs have been bad. I know that may sound silly, but my point is the extremes were there. There's no way we're getting by just, okay, they've adjusted things, they've taken fluff out of the economy, and we're just going to, no, there's going to have to be some pain. And the car markets, the housing market, in my opinion, are going to create that pain. So I don't possibly see how we have a soft landing. But then again, I'm not, what's his name over at Guggenheim, but my opinion is I don't think that's possible. I don't think we're anywhere near 2008, but I don't see a soft landing.
Okay, so do you think the Fed is just a brute force tool and they're always going to drive things up too high and then too low in that endless cycle? Is that just inevitable?
Um, if I understand your question, you mean they're never really going to have credibility and always be late on both ends? Is that kind of what you're asking?
Well, I'm saying I'm not assigning blame. I'm saying, is it even possible for them to be accurate? Because if the I'll put it this way: if the Fed can't predict the economy, who can?
Yeah, I think part of that just comes down to dumb luck. Like if I was the Fed right now, I get it. They're worried that the same thing that happened in the 70s when they took their foot off the gas will reignite and things will get crazy. My personal opinion, having friends on the ground with big businesses, knowing CEOs that have, businesses that are affected, that they can take their foot off the gas, let these interest rate hikes catch up, right? Which I think they are. Like I'm hearing time and time again about a slowdown in so many different arenas. I think they could, and we'd still have a recession. But I think the way they're doing it now, after being so late in the game and talking about transitory silliness, now it feels like they're doing the same thing all over again. So I think they have no shot to have, a soft landing. But here's the problem. They risk credibility if they take their foot off the gas because the numbers, I get it. They're going by the numbers. The CPI doesn't show it. The PPI doesn't show it, right? Jobs don't show it. But in my opinion, those are all lagging numbers. So it would take a lot of balls, excuse my language, or guts to say it's catching up. You don't see it yet. And then the problem is they're in a no-win situation. The markets will inflate and the markets would run. And that goes against everything they're trying to do. So maybe they're between a rock and a hard place and can't win.
Okay, so I think you've provided a pretty good picture of what's going on from in the economy. Let's sort of get down to the down and dirty details of actually making money in the market now, because like we don't want to just avoid the car crash. We want to make some money where we can. So what's working for you now?
Can you hear me? Everything's good?
Yep, I can hear you now,
Okay,
David.
great. So, sure. So here's what we do now. Here's what I've been preaching for 9, 10 months. Less positions, less size, don't be a hero. So what does that mean in English? That means I kind of plan out trades where risk reward sets up, and I think my odds of being right, not for a home run, a single, a double, cash flow, will be very solid, and the odds are in my favor, whether it be long or short. And then what I do is I say, multiply that over and over, right? Don't worry about home runs. Think about compounding growth, and it adds up. So, what's the best way to go about this? Probably to talk about the last few days. Okay, great. So, last week I said, guys, I think that Tesla is ready to bounce, but it has room all the way down to 207. And I'm not a big Tesla fan, but as people know, I've had some monster wins there, so it's a good focus. I like the volatility. Anyhow, so that was my focus. And I put on a very small position, I believe, on Friday, and then really Monday was the focus day. As we came into 220, I was buying, 218, I was buying, and yesterday at 224 through 226, 7, wherever it got to, we were selling most. I think everything I added yesterday, I sold. This morning, I said, hey, I don't like the market here. I want to flush. There's not a lot I like. But Tesla probably bounces yet again. I'm not a buyer here on the open, but if we come in, I'll buy some. Where's your pivot low? 218. So I'll buy at 219. I don't like to be exact. I don't make money that way. So I bought some. 219, 220. Got to 223, 224. Guess what? I sold everything I bought today, and I remain with a small core. Now I add those two singles or doubles, however you trade, together, and that was great cash flow. In between that, market's got a bit oversold today. I looked at some RSIs and I said, guys, I'm not really bullish the market, but I think we're going to bounce. How can we take part in some upside and maybe hit a double, right? Without putting a lot of money out there. So I suggested we look at 368 calls on the Qs as the Qs hit 32 RSI. If I lost it, it wasn't going to change my month, but it might actually give us a single or a double. Honestly, total dumb luck. The markets rally. Those calls went from 280 to, I don't know, 450, wherever the hell they went. Turned out to be like a double or a triple. I said, please sell most. This is a bear market. So I'm not here to impress you with those. What I'm saying is I haven't done much besides those. So now you add those three together, and it's created some great cash flow for the week. But the whole key is not to do three other trades and try and ascertain whether we've hit bottom, or you can pay a high only to sell at a new high. Those games are gone. Less is more, and we do a few of those trades a week. Sometimes it's on the short side, of course, and it adds up. And that's how we get by. Less positions, less risk, never, chasing strength. Like today, when the Dow was up 400, I said, hey, you want to be short the market? This is exactly where you do it. Every time we rally 4 or 5 points in the averages, they're sold. Now, I had no insight as to the Bank of England making that announcement, so it worked out better for people that shorted on my chat than I thought. But the point is, whatever was going to come out, we keep rallying, and those rallies fail only to make new lows. So we try and not short in the hole. We look for rallies to short. And when things are ugly, we buy quality names that are oversold. And again, when we're up, we don't say, oh, was that the bottom of the market? We're going to get rich on this trade. We look to take profits and hit singles and doubles.
Okay, so I'm in the inner circle chat every day, and it does seem.
Then why the hell aren't you doing better? No, I'm teasing you.
It's no, all right, David. I'm worried I'm going to jinx you and break the winning streak. That if I come in and start buying them and they don't work out, you're going to blame me.
I got Kira. She's got she does rodeo. I can't say, I don't want to jinx me, but with Kira, I'm pretty good.
Okay, yeah, okay, all right, but
and then Rick with his special sauce. Go on.
I love Rick's special sauce. So it does seem like there's these repeated wins coming in a smaller number of names, namely Tesla, the Qs, ENPH is in there sometimes, but are you just keeping this very small number of names on your screen?
No, it's really successful traders try and find a trend and stick with it, right? So let's go through this. Because I'm old, I really understand Nucor and how it trades. And when they pre-announced a few weeks ago, and I looked at the chart, I said, this is a breakdown that'll continue over weeks. It's time to short. I don't want to be exact, but I don't know. I think everyone was short between 128 and 130. And I think within a couple of days, it was 118 and 120. And the one thing I said was trade around your position, but hold some. This is going to 100. And I just understand how it trades, and there was a lot of reasoning. My point was, so we continued on that name, and you kept hearing about it because every 4 or 5 point rally, Kira was putting on another short, right? And we stuck with it. And then I think down at 107, she covered, and that was that. And there hasn't really been a setup to do in that name. But if the name's right, if the trend's right, and hell, the trend is your friend, like as old school as that is, if you can stick with it. So you hear about Labu a lot because when it was working, we stuck with it and bought the dips. You may have noticed I haven't been talking about Labu for weeks because, well, it's not interesting to me here. And if anything was, it would be XBI. But part of it is less positions and sticking with what's working. And that's why you'll hear the same names over and over. But whether it's, I mean, if you think about it, ENPH or Oxy with Rick, I mean, that's all he's been buying for a few months. Or for me, AMD for a couple weeks, or the Qs, they're pretty diverse. It's just a matter of really kind of having an edge. So if we have an edge, I don't care what the symbol is.
So do you feel like you naturally have a better feel for certain names?
Here's what I want to try and answer this. No salesmanish. Here's what I think. I think that I was built on volatility. That's where I do best. I love vol. So the Qs inherently have more vol than SPY a lot of times. So I gravitate there. Growth has more vol, right, than a lot of areas of the market, whether it be restaurants, etc. So I have a little bit of an edge there because I embrace volatility, not in a cowboy way, but in a good way. And then my age lends itself to an edge because, like, I can remember semiconductor gluts and understand how low they can go, and that semis don't typically trade at 20, 30, 40 times like AMD and NVIDIA, but for years and years they traded 8 to 15 times. Or I understand that Lennar is not an easy buy, even if it looks like it's trading at 5 times earnings, because that usually means it's really 10 times earnings because people don't know earnings are about to implode. So my edge is perhaps my age and just learning trial by error and then embracing volatility.
So what are you learning these days? What is this market teaching you?
Uh, Here's a great one I learned. That anything possible can happen. And I learned that once GME happened. My biggest thing I learned is I usually know and feel and understand. The one thing I learned in the last 2 years is nothing is impossible. That things that I would have bet my entire life savings on happened. So don't be too smart and don't discount even the craziest thoughts because extremes like I've never seen on the up and down side have happened. You know, I'll give you an example. I like the concept of T-Doc. Thank God I'm not in it and haven't gotten hurt in it. But I never drink, like, there was nothing that I saw on the surface. Yeah, I didn't look at numbers, but just in terms of penetration, the business they were in, I never would have dreamed at 300 it could be 25. So the extremes are so immense, whether it be the GMEs on the upside, whether it be the T-Docs on the downside, whether it be companies that have no business being public, raising money without a business plan. Anything can happen. And I used to feel like the markets weren't like that. Now the most dumb things you couldn't dream up if you were writing a movie happen, right? Like the rocks that people pay $1 million for, just stuff that you can't even dream up. So that's what I've learned. Anything is on the table.
Yeah, so it's interesting you brought up T-Doc. So I'm going to throw something, it's going to sound a little convoluted, but a lot of these sort of work from home, stay at home stocks are lower today than they were in January of 2020, like Zoom, Teledoc. Is that the buying opportunity of a lifetime? Because it seems like Zoom
No,
stocks like
let me stop you there. So this is where traders versus people that understand finance maybe have an edge. A lot of them are bigger they are today in market cap than they were then because they've done several secondaries. So just going by price, you never do that because you've got to go by market cap and debt, right? You know how much debt and secondaries these companies have done. So price literally might be cut in half, yet the market cap may be even higher. So the direct answer is no. And then secondly, because I already know you know the answer, but I'll tell you, is no one should ever in their right mind buy a stock based on what percentage it is from all-time highs, because if it went to the all-time highs based on drinking Kool-Aid, like a T-Doc or like a Zoom, et cetera, then pulling back 15%, 50% means nothing. And the best way to walk you through that is Shopify, right? I even for a second thought, wow, this is my shot because I bought Shopify during COVID at 300 and it was a huge winner. So I couldn't wait for it to come back in because I sold it 1,000 points too soon. My point is, when reality sets in and valuations matter, being down 50% off highs means nothing, right? Because eventually, when valuation matters and earnings matter, most of these stocks came in 80, 90% because it's based on valuation. So no, they're not a buy of a lifetime because they're even lower than they were pre-COVID, because some of them have higher market caps even here and are worth more. And secondly, because where they once were means absolutely nothing.
okay, so how do you know when valuation matters? Is it simply a case of
The
prices
Federal
starting to break
Reserve
down?
gets on the mic and says, "Yo, what's up, people? The game's up." No, but in all sincerity, they really told us in January that they've changed, and they really are intent on getting inflation under control, and that this funny word, called transitory that they used so long was a mistake. He never really said it in that type of way, but they admitted, okay, it's not transitory. So it told you game on. They literally told us game on. I wish I embraced, the downside ahead. I could have done better at that. But the point is, they told us, and that's how you knew. And nothing has changed since, except numbers got hotter for a period of time, and they continue to move higher in rates. So that's how you know when valuation is all about liquidity in the markets. And if the Fed's out there backstopping things like we've never seen for 2 years, or if the Fed's out there ridding their balance sheet of, billions and billions of dollars of assets and making things harder. And they told us that that's our plan, and they've stuck with it. So anyone that listened knew.
Okay, I want to shift gears for a second because we're hearing from a lot of people that are trading actively that their anxiety levels are through the roof because of the daily ups and downs. So, how do you deal with those day-to-day stresses and anxieties in the market?
A couple ways. The first way is I always tell people, keep it real simple. Go read that Mark Douglas book, Trading in the Zone. I'm not joking because he's all based on emotion. But let's get to the more important stuff. Do less, right? And leave yourself room to not be exact. Bear markets by nature take people out at the bottom, then have these cute bear market rallies, whether it be intraday or several days, and then force shorts to cover and then go back lower. So the way I deal with it is pretty simple. It's not like magic. It's buy less, assume my first buy is wrong, leave room, give a target for my second and third buy, usually 3 buys, that's it, and have a target for when you're wrong. So if you're wrong, right, you can just not think about it, not say, oh my God, will it bounce? You have an out and it's done. Take out the emotion. So lower the size, whether you're shorting, whether you're going, because let's face it, right? There's nothing better than a bear market rally. I mean, they're much more vicious than bull market rallies. So whether you're shorting or going long, maybe do it in halves or thirds, less size, because size dictates emotion. So size down.
Let's talk a little bit about humility. because like before you talked about making mistakes with AMD. So how do you develop, I guess, a real sense of humility without being too down on yourself?
You know, I've learned that being humble has zero to do with being down on yourself. It's thinking of this as an everyday business where you make mistakes and you learn. And the best CEOs and managers since the beginning of time run their businesses that way. They learn something from someone they hired that's beneath them in terms of power at the company, maybe makes less than them, but they listen and they learn something and the business runs better. Same way with trading, right? If someone understands a concept or how to buy something better, and this, I learned this through just watching the chat. There are people on this chat who trust me more than I trust myself, which is kind of scary. So I have to learn to embrace my ideas more. But the point is, they think less, they want to understand, right? They don't buy or short blindly. But if they find something or someone where they really think they have quantifiable knowledge that's better than themselves, right? They embrace it. And guess what? They see it work over and over. It works. Now, here's where that gets with humility. Then, when something's wrong, guess what? It's just everyday business, whether you were following someone or whether it was your own idea. It's just part of life. But if you don't admit your mistakes, if you don't address them, if you pretend they don't exist, they keep coming back. So I find the people who aren't humble just make the same dumb mistakes over and over. And I have a few friends who do it. And they're like kind of dear friends. And I wish sometimes I want to just like right in the face because I can't change them. But they refuse to be honest with themselves. So you don't have to be depressed. But here's what I'm bad at. I used to be the best short. I would just attack stuff. I did it on Redler's Chat for years. I mean, attack. That 2020-21 rally really, like watching Melvin go out, put the fear of God in me. And I'm not as aggressive on the short side, right? And I watch Kira take some of my own ideas and make hundreds of thousands of dollars. Okay, well, now I have something I have to work on and get better at because God knows my ideas. I mean, just call it like it is. They're pretty darn good. Sometimes I don't step on the gas. So by recognizing it, I have something to work on and get better rather than pretending it doesn't exist. Doesn't mean I suck. Doesn't mean I should feel depressed. Just means I can get better because maybe I lost a step with something or nerves got to me. So humility just makes you a better trader. Keeps things real simple. Certain things you're good at, certain things you're bad at. The quicker you recognize what you're bad at and don't pretend you're good at it, or you didn't say it, or you didn't do it, or you're the smartest guy in the room, the better you are. Everyone I know is the smartest guy in the room, makes no money trading.
So what do you think holds people back from being honest with themselves? Because you see the P&L. You're either making money
Let
or
me
you're
stop you
losing
there.
money.
Go read, you included, go read that Mark Douglas book because we are predisposed to feel awful when we're wrong, right? It has nothing to do with trading. When you're wrong, you feel bad. Some people would rather lose money and not be wrong. I know that doesn't make sense, but conceptually, right? Being wrong is like, oh, God, I was wrong. Now, the quicker in trading, it's not about wrong or right. It's about making money and keeping your losses small, the better it is. But too many people are caught up with being right or wrong. The minute you take that part of it out, right, that part of the equation, you win. But people are built emotionally to not want to be wrong. Sorry to interrupt, but I knew where you were going, and that's the answer.
Right. I think that is the perfect note to close this out on. Guys, I hope everybody enjoyed this. David, I hope you will join us once again.
Oh my God, I had a dandy time. I hope you did too, Michael.
I love talking to you, David, because when I say something ridiculous, you will throw it right at me, and you're good at delivering some harsh truths to people, which I think is necessary because I think there's so much fluff out there. We need a little good old fashioned brutality.
Are you going to tell them about how we're going to do the first video spaces where I do my breakdancing down the road, or you're not going to bring that up?
I don't know. I heard you're not a very good dancer, so I don't know what to say
Oh,
about that.
thank you, Michael, for doing this. I really appreciate it.
Oh, okay, guys. So if you're interested in applying for Inner Circle, which is David's trading community, go to t3live.com/IC, t3live.com/IC, and follow David on Twitter. We'll be posting the replay and clips and everything and links. So, everybody, thank you for joining us. Have a wonderful evening.
I appreciate everyone showing up. And Michael, thank you again. I do appreciate it.